It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we're getting right down to the crunch here because October 15th is extension deadline, and you got to get those returns in that you filed extensions for. So we want to make sure we talk about that. We're going to talk about failure to file. We're going to talk about offers and compromise. We're going to talk about 1031 exchanges. And if you're somebody that just hasn't gotten it together, we can get it all ready for you. Hey, and I got in studio with Tiffany Fabian. Hey, Tiff.
Hey, happy Saturday.
Happy Saturday. It's like really nice out.
Gorgeous.
And Christopher Fabian.
Hello, Esther.
And I know you did another seminar today. We did over 100 people that were at those seminars, right?
Yeah, definitely. It was a great turnout. Everybody loved it. You know, and if you missed it and you want to come in to see what the BBB can do for you, you can call and make an appointment, and we'd love to sit down with you one-on-one.
And you can actually go to our website and download everything, don't you think?
Yep.
So if you go to egtax.com, there is the big, beautiful bill. We have it all written up. You can download it, and so it makes it so much nicer. There are great things in it for some people, and some people are not going to get any benefit at all. So, you know, you want to know who it is that's getting the benefits so that they can take advantage of reducing their estimates, changing their withholding, and getting some of that money that they would have paid at the end of the year as a refund, get it now. Makes the holidays easier, right?
Definitely.
And then we have school starting.
Yep, school starts this week, and in a couple weeks we'll have school on Saturday, so there's still time to register and, you know, learn everything you want to know and then some about taxes.
And everything you didn't want to know, right?
Yeah.
Yeah, the classes meet twice a week, either in the mornings or evenings. They're free of charge. You do have to purchase the book. The best part about the classes is that we hope at the end you'll come in and work for us, and at one of our over 30 locations. It's an honor. And I like to say, as you say, you'll be the hit at every party because no matter where you are, people are always talking about taxes, you know?
Because it's such a mystery. I think, you know, isn't it true, Chris, when you do these seminars and you show how the graduated income tax is derived, people are blown away?
Oh, yeah. How jumping
because they
a tax.
Think, if I go over by $1, my whole bill's going to go up by an extra 12% or something.
Yeah, there's no such thing as jumping a tax bracket.
Right. No. And it goes 10%, 12%. And so if you went $5 over the 12% tax bracket, then it would cost you, that's the 20% there, right?
Yeah.
So it would cost you $10.
I see why people get confused, though, because people are always saying I'm in the 20% tax bracket, I'm the 10%, I'm in the 15% tax bracket. But that just means that's the highest bracket that your income is taxed at. And so it's just a little tiny smidgen, perhaps.
Right.
You know?
Right. So the first layer is at 10, then everything over 10 is at 12, so it went up an extra 2%. Then the next layer is 20, and so then that layer would go at 20%, and it graduates all the way up to 35%.
That's right.
And so if you made it to the top bracket, you would be a very wealthy person, number one, and you'd pay a ton of taxes.
You sure would. You sure would. And you would not be benefiting from any of the credits or the special deductions.
You get no benefit, none. Unless you're operating a company. And many times that's exactly what happens to people. Trying to lower the thing, their taxes, they think, well, what can I do? Well, you need to get involved in a business. So and then that makes them more money, right?
Yep, it sure does.
We talked last week about the interest rates, and interest rates, even though the Fed lowered them, there's still some very, very good rates out there. And I know the Huntings were calling the other day, and they wanted me to review it. I was going to call them, and I thought I'd just do it over the radio because they listen all the time. So, Goldman Sachs CD for 14 months is 4.10%. Next Bank, 1 year, 4.05%. Lending Club, which is the highest one, is 4.40% for 8 months. Colorado Federal Savings Bank is 4.35% for 6 months. Synchrony Bank is 4.10 for 6 months. Limelight Bank, I don't know where they come up with some of these names, 4.30% for 6 months. CIBC is 4.11. I think that's a Canadian bank, isn't it, CIBC?
I think so.
And
I'll
that's
look it
for
up.
9 months. And then the best deal is Sallie Mae. Sallie Mae's paying 4.10 for 15 months.
Wow.
So I just thought I'd talk about that.
Yeah, CIB stands for Canadian Imperial Bank of Commerce.
Yeah.
Good job.
So what'll happen is you're going to end up having to do the FBAR, right? If you put your money into a Canadian bank and it's over $10,000.
That's right.
So
Yeah,
that's
but
something you need to think about.
yeah, but you also are going to be gambling on the exchange rate.
That's true. And so it isn't really 4.11 because the Canadian dollar is having a kind of tough time right now.
Yeah.
Right.
Although the U.S. dollar ain't doing so hot either. So anyway, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930, and we got a text, right?
Yep, we do. I am on Social Security disability, and I have not filed my taxes in a number of years because I don't have to. With New York State inflation rebate check coming out soon, should I file for last year? So it's not last year, it's 2023 that you have to file. So it's not your 24 return, it's your 2023. And he has until
Also, not
he or
only
she.
the New York State rebate that's coming out, but if you had property taxes, you missed that property tax rebate too, right?
Yep, you did in 2023 and 2022. And the date that you have to file is until October 15th.
So that's coming up too.
Yep, that's coming up soon too. And
So yes, you should file your return for 2023, even though you have no liability, so that you get in line so New York State will pay you that money. And if you're a homeowner, we can get you the New York IT 229, which
Right.
is also a refund between $250 and $350
Yep.
per year.
Yeah.
So that's a good thing.
Yeah, I can't tell you how many people have come in just to do the inflation check, and we tell them, oh, guess what? You're going to get an extra $300 or $350 from New York State because of that property credit. So
thank you, Kathy Hochul.
Right. So so those are just some of the things we're dealing with. Again, tax deadline is coming up for extensions October the 15th. We're going to take a short break. We'll be back on the other side, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We'll be back on the other side. Hey, we are family. I think of everybody as family. And, you know, like family, well, sometimes families can be a pain in the keister, but not as us, because we do love you and we certainly want to help. Sometimes family does take liberties with you, don't they?
Oh yeah, absolutely. And so
But
we just
no matter what, you know, family, when the chips are down, everybody turns to family, and we want people to turn to us. And you don't have to turn to us in a catastrophe. You can turn to us just for if you have a question.
that's right.
You know, and I'm going to tell you, like with the big beautiful bill, there are big things happening, and it's interesting how so many people are just oblivious to all the changes. So, you know, EG tax wants help. So, all right. So October the 15th is a big day,
extension deadline day.
right?
Yes, yep, it is. I know I was at the office until about 6:45 last night doing somebody's tax return, and we got it done. We got it done early for him this year.
Oh, good. You got it 12 days before the deadline.
Yes.
So, okay, so let's say that the reason you did the extension is you owe money. What should you do? Should you file anyway, or should you just put your head in the sand? What's the best thing to do?
Oh, put on camouflage. They'll never find you.
Yeah, right.
No, get your return in. Stop penalties. Stop, because, if you owe them money, the penalties and interest is always going to keep accruing. You're already past the 5 months of filing the return late if you didn't do the extension. So you're already at the maximum penalty there. But the payment for not paying and the interest, that's accruing daily. And that.
So the failure to file penalty is 5% until it gets to 25%. The failure to pay penalty is 0.05% until it gets to 25%. Then there's 7% interest on the mess plus New York State.
That's right.
So you're looking at like 60-some% on that balance due, and that's daunting. I mean, it's like, wow, you don't want to get into that situation, but there is ways around it. But the important thing is you want to eliminate that big penalty, which is the failure to file penalty. So once you file the return, even though you owe money, that eliminates a 25% penalty.
Yep, it does. It does, because you're getting your return filed, and that's the most important thing, because that failure to file penalty is the most expensive one. I mean, 25% of your balance, it can be very large, extensive.
I mean, think about it. If you owe $250, if you owe $100, $1,000. At the end of the year, if you don't file your return, you're looking at penalties like 50%. So now you owe $1,500, and then next year you'll owe $2,500. I mean, it just gets to the place where it's ridiculous.
Right.
However, the cavalry is on the way, so there are things that people can do, right?
Yep, there sure are.
Like, you're the queen of this, Tiff.
Oh, so if you owe money and you owe back taxes, and if you have doubt to collectability and you have little means to pay, you could potentially do an offer and compromise. That's where you pay pennies on the dollar. They also call it the Fresh Start Initiative. And so if you're out there, like you always say, don't bury your head in the sand, just make a phone call and see if you are a candidate for an offer and compromise. Now, you really have to be in a situation where you cannot pay. And so we do certain forms. It's called an offer and compromise. And you offer them some money compared to what your balance due is. And it really can end up being like pennies on the dollar. But I got to tell you, they don't mess around. You really have to prove that you are in a situation where you cannot pay. And so,
and that happens a lot. I mean, life goes on.
Yeah.
And life can really throw you some horrible curveballs, like sickness.
Yeah.
You have this gigantic debt for somebody being in a hospital. Maybe you don't have very good insurance, and you have a high deductibility that you have to pay in order to have your health insurance kick in. I mean, there are really bad things. And you know what? Everything that I've seen is the IRS really, I'm going to say they have a heart. Because if you really have the inability to pay, they really go way out of their way for you.
They do.
But
They
if
do.
you
They
can
even
pay,
yeah.
you will pay. So
yeah,
let's
they
talk
even
about
have you are insolvent, and if you're insolvent and you can't pay, they'll put you in a non-collectible status. And so this is something completely different. And a non-collectible status, after 10 years of being in a non-collectible status, the debt will start falling off. But I got to tell you something important about the non-collectible status versus an offer and compromise. Is a non-collectible status, they will issue tax liens, and so the tax liens will impact your credit. And if you have any assets or you come into any assets, they have the first line at the well, they're going to be the first ones with their hand out.
Right, because if you finally do have the ability to pay, everybody else had to pay, you have to pay,
That's
right?
Yep.
But the worst thing is you have all those penalties and interest that have accrued too,
Yes.
Right.
right?
Yep. And they add up, and they then you get more penalties and interest on the penalties and interest.
And interest, right. I'm Esther Villiers, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. So looking at this practically, because sometimes, the truth is sometimes people can't deal with it because of psychological things. It isn't even the inability to pay. They just are like a deer stuck in the headlights. They just don't know what to do. I think the first thing that somebody should do is to call us. And it's not because, or I don't care who you call, but I'm going to tell you, you're probably going to get the most tender, loving care with us because you want to start the process. Once you start the process, you find out that, wow, I have made a mountain out of a molehill. How many times that I've had things to do and I didn't want to do them, but when I finally did what I was supposed to do at the end of the day, I thought, what was I so upset about?
Yeah.
So I think the best thing to do is if you're somebody that's been getting those letters and you throw them in the trash can, they're seizing your Social Security, they're taking money out of your paycheck, they're sending you all these terrible notices, give us a call at EG Tax at 632-7886, and we will do our level best to help you to get a handle on this thing. Then I can think of one of my clients who, I think she's been our client for like 40 years now, 35 years. When she first came in, she hadn't filed her returns for 11 years. Now she's Johnny on the spot. Everything's good. Her life is great. And she said that was a real bad time in her life. She just couldn't get a handle on getting it done.
Yeah, I know. The other day I had somebody call me about an offer in compromise, and I don't believe, although Chris is vetting it and looking at it different, I don't think he's a candidate, but him and his wife haven't filed for a long time. And so they made an appointment with Chris, and he's going to file their back taxes for them. And they just did, like you said, they buried their head in the sand and they haven't filed for a long time. I don't know. What was the reason, Chris?
I can't remember.
Life got in the way. But the first thing is that's another thing with an offer in compromise. You can't be behind. You have to be current in all your returns. So you got to make sure that all the years are filed.
That's just part of what we do. So when we're doing the offer in compromise, we get everything all, it's like you got a lump on your back and you think, oh my gosh, I hope it's not cancer. And so you just let it go. And then the lump is bigger and bigger. Oh, I hope it's not cancer. And then you go to the doctor and you find out, oh, it's not. I'll go to Dr. Pimple Popper. It's whatever kind of tumor she's got. But I mean, sometimes you just make a mountain out of a molehill. And that's part of what we do. The other thing, if you, add on the offer and compromise, there's also doubt to liability. Sometimes you're getting a bill because you didn't file a tax return and you might have been self-employed and they did the tax return for you without any of the expenses that the business incurred. And so really you don't owe the money that they say you owe, right?
Yeah.
And so then we fix it and the liability goes away altogether.
Yep. If you don't do a tax return, they'll do it for you. And same with sales. Then same with New York State, they'll do their sales tax returns for you too. And you don't want New York State doing your sales tax returns for you. And
you don't want the federal government to do the
income tax
return because if you have a small business, there's expenses, there's travel, there's rent, there's supplies, there's advertising, there's office and home. There's all these things that reduce your gross income. But when they know they got a 1099, they just go ahead and put the gross amount, do the FICA, and they tax you for all it's worth. And if we get a load of this amount of money that they have said you owe, and we go back and investigate and find out, well, wait a minute, you didn't file that original return. We're going to file that for you. We'll amend what they did, fix it. Many times people don't owe at all, and that's what happens when you're afraid to deal with it. Right?
Right.
All right. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. So in this liability situation, and again, we're coming up on extension deadline, October 15th. Also, our tax school is starting, and you would learn all about this stuff in the tax classes, which would make you so smart, and you'd know your own tax situation, because it isn't at all what you think it is. When you hear the politicians talk about the tax code, I can't believe we're talking about the same code, because I know how it is, and it isn't what they say.
Yeah, I don't think they understand. It's just like how Trump used to say Social Security's tax-free, 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 tax-free. And it wasn't. They came up with the senior deduction.
Right. Or even no tax on tips. Well, there's no tax on tips provided your income is low enough and provided it's not more than a certain amount of money. But anything over that would be taxable. No tax on overtime, same thing. So, knowing the tax law can give you tremendous power over your own situation. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone, 716-8030930. We're going to take a break for the news. And to us, you are family. And we say that because when you come up with something financial, it's nice to have somebody that you can trust, that you can just call and ask a question. And it doesn't have to be necessarily taxes because, and Chris and Tips, bear me out, almost everything we do and anything you get can be affected by taxes. So many times we are knee-deep in a lot of other things other than just income tax. We're stocks and bonds and interest and dividends and annuities and pensions and RMDs and QCDs and all those things. Yeah, everything. Rental income, sole proprietorships, corporations. Because of taxes, that's their way of getting the money to run the government. When you are a tax professional, you're exposed to a lot. So feel free to give us a call. We would love to be your advocate, and for information, there's absolutely no charge. So wanted to let people know that, right?
Yeah.
Oh, by the way.
What, you were going to say something, Chris?
Oh, I was just going to say, whatever your life changes are, impacts your tax return.
Amen for that. By the way, when I was getting all the interest rates, a lot of people want to know where I get them from. I get them from bankrate.com and nerdwallet.com. So you can also look that up yourself. Right?
Yes.
All right. We have a text.
Yep. It says, Esther, we are the sole supporter of my dependent son who is completely and totally disabled, and we had $60,000 in dental bills for him. Will we be able to use that this year when we file our 2025 tax return?
So normally you could not claim someone as a dependent if they aren't a full-time student and they're over the age of 23, unless they have they're totally and permanently disabled and their income is low. So it sounds like he has no income, and so you're saying you are 100% supporting him. So yes, you would be able to claim him as a qualified dependent, and he's going to save you about $500.
Yeah, well, the medical bills will
set.
set.
The medical.
Yeah.
And the medical. And so you have to also take into consideration, it isn't just his dental, but all the other things, taking him to the doctor, right? maybe some adaptations you had to your home. Maybe you had to do grip rails in the bathroom, or maybe you had to modify the whole bathroom. Maybe you put in an elevator. Maybe you got a hospital bed. All of those things will be deductible as a medical expense for you, plus his personal exemption.
Yep, and your medical bills too.
And you're right, absolutely.
So
I'm sorry to hear about your son, but yes, at least and load up everything that you can in 1 year. But here's the other thing. It's a shame because here's all those expenses that are deductible. The question is, do you have the income on your end to be able to substantially benefit by these expenses? You know what I'm saying, right, guys?
Yeah, absolutely.
In other words, if they have $10,000 in Social Security, it doesn't make any difference if they can write off their son's medical because they have no tax liability, right?
Yeah.
So what they want to do is make sure they have enough tax liability. Maybe they have money in a 401k or in an IRA that they could take out, and because they have this large deduction on the other side, they'll take that money out tax-free. And I can't tell you how many times we say this to people. You can create your own tax situation if you do some tax planning, and we do that. There's no charge.
That's right. And so you guys might have already said this. There was a client who texted in, but they would want to take advantage of any extra medical things that they might want to get done this year, like dental too, or medical cost. And so they would want to just bulk it up and take advantage of the fact that they're already itemizing.
But they have to have income.
Yeah, I think I know who this texter is, and he's working and the wife is not working, and they do have income.
Okay, all right.
Yep.
But maybe with all these deductions, they want to start taking money out of their 401k.
Yeah.
You know, so. But here's the thing: give us a call. We'll hold your hand through the process, because a lot of people don't even understand what I'm saying. You know, I'm talking English. They understand me in English, but they really don't understand what I'm saying.
This is true.
Right? Don't you think that's true, you guys?
Oh, because taxes have their own lingo and you have to understand it.
Right.
So.
And how the whole thing works. So going back, and I know we have another text again, 8030930, 8030930, star 930 and a cell phone. Text us at 716-8030930. So I was with a taxpayer the other day, and they have a large liability, and they have assets that they could sell so that they could pay off the liability. But guess what?
They didn't sell them.
They don't want to.
They don't want to get rid of the assets.
Right.
So for the privilege of not getting rid of the assets, they're going to pay like 60% in penalties.
Yikes.
It makes absolutely no sense. Really, you need to go see the psychiatrist or psychologist first to find out why you're doing this, because you're really hurting yourself. So, I mean, for instance, he had a great big motorhome that they even haven't been using, and it's paid for. It's worth about $150,000. That would have cleared up his liability. But they said, but we really love the motorhome. Buy another motorhome. But
So
this
it can sit
motorhome
in
is
your
gonna
driveway
cost
and
you
do nothing.
Right, this motorhome's costing you like $75,000 in penalties. I mean, you know.
Yeah.
So if you have jewelry, savings, pensions, equity and assets like a
Silverware.
home,
Silverware.
Oh yeah, and that happened the other day with my friend. She was having financial problems, and we were going over her assets, and she said, "Esther, do you think that silverware that the lady I was taking care of gave me is worth anything?" I said, "Is it sterling silver?" So we look, and sure enough, so she got $2,000.
That's a lot of money.
Yeah,
that was just sitting there collecting dust.
She had it in her storage facility. She didn't know what to do with it. She says, I don't have any fancy dinner parties.
No.
But that's what happens with people, is that we kind of get stuck in our own quagmire, so to speak. So, I mean, you know, you might have a vehicle, The other thing, I had another client the other day who has a big tax liability, and they're driving around in $1,000 a month car. I said, why don't you trade that car in on something less expensive like a Honda? And he just goes, oh, I don't want to drive around on a Honda. Well, you want to have all this liability to the federal government?
No.
You know, I mean, it's just being pragmatic. You want to do what you can do to get out of debt, and don't go back into debt again with the IRS. They don't play nice.
They don't. It's really expensive.
Right, they don't play nice. All right, we got something else.
And the last thing is, you know, we were talking a minute ago about how nice the IRS can be. And so I think people don't realize they can be nice, but the debt to be indebted to the IRS is really expensive. I've watched it for a long time.
What I meant about being nice is if you really can't pay,
right, I know. Yeah.
then they're good. But if you really can pay, it's not good to fool Mother Nature.
No.
Remember that commercial?
Yes. The next text is, what is the income limit for the new senior deduction? I think that Kathy Hochul is mentioning. So they want to know what the income limit is to qualify.
Chris?
Well, the income for the New York State inflation check, which that's not what the texter wanted, but
I thought it was about the new senior deduction.
yes,
right?
yes, yeah.
I
That's
confused you
$150,000
because I said
Right.
Kathy Hochul. Sorry.
Yeah. So the senior
That's
deduction
$150,000
for a married couple.
But it's a very, 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 very graduated. The deduction stays there for a long period of time after you go past the 150, right?
Yeah, for married, 75,000 for single. Yes.
Right, and there's a graduated slope.
Very gradual. Yeah, 6% per thousand over the threshold. So a single person loses it all when their income is 150,000. So that's a big graduated decline.
Right.
Where the tip and the overtime income is you hit the wall, you're done. So
there it's like all or nothing at all.
right.
Well, and that's because they're really it would be income that you had, and so they're saying that's it. We're not going to let you subtract any more than the 25,000 or the 12,500. You know.
Yep.
But I mean, it's a miracle that these people are going to. And it's interesting. Do any of you, when you're tipping now, do you realize that your waiter, waitress person, the tips that you're getting are tax-free to them? Does that bother you? Or have you changed the amount that you're giving to people in tips? I will tell you, every time I get it, and it's 20, 22, and 25%, I think to myself, gee.
The other day,
Do I really want to tip that
the
much?
other day, Chris customized it, right?
Yeah, well, think about this. If you're a married couple and you go out to dinner every night, right, and we'll say you just give a $10 tip a night, right, times 5 days a week, that's 50 times 52, that's $2,600 a year you gave in tips. But the servers that you've seen aren't paying tax on that money. You are.
That's right.
So
because that's what you earned. Right.
Yeah. So you're
Unless
paying
it was already
tax for the
after-tax
servers.
dollars. Right. Right.
Food for thought, no pun intended.
And so you got a server making, let's say, minimum wage plus tips. So they're doing good, $30, $35 an hour.
Right. Yeah. I mean, you look at these servers from steakhouses, or I won't give names, they're high-end restaurants. You figure they make $50,000 a year in tips, but they're only going to pay tax on $25,000 of it.
Right.
That's really.
So if they were in the 10% bracket, they'd save $2,500 in taxes. But on the state of New York, there is
Nothing
for that, right?
Nope.
Okay, I'm Esther Gillies, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a short break. We'll be back on the other side with your texts, comments, and calls.
Your heels up and throw your hands up and throw your
I knew he was going to play that song. You know,
Hey.
I love the Bills. I adore the Bills. You know, I watch everything about the Bills after they win.
I was going to say, except the games.
After they win. You know, I told you last week, if I only knew the score before the game, I could watch it, but I just can't, you know.
Yeah.
Anyway, I love the Bills. During the break, Russ Gullo, and I know I have something else I want to talk about with some text here, but Russ Gullo had a commercial about the 1031 exchange. We've been doing a lot of them, haven't we, Chris?
A lot of tax returns with them on it.
Oh yeah, I mean, just this week alone, I've done 3 returns who had exchanges on them, and
So let's say that you had 5 rentals in Buffalo that you bought 35 years ago, and maybe you only paid maybe $30,000 a house. So you got 45. So you got 30,000 times 5. So you paid 150,000, and so they're fully depreciated except for the land. And now you can sell them for 700,000 because that's how much the real estate went up. So you have like a $550,000 gain, and you're going to pay about $111,000 in taxes plus the state of New York. So you're going to pay probably $150,000 in taxes. There's a way out, right?
Yeah, definitely. You can do a 1031 exchange. I mean, if you want to stay in the real estate game or do a...
Well, you don't even have to stay in the game,
exactly.
do you? You can do a passive investment.
Yep, that's what I was going to say. That's all right. So you just reinvest your money through an exchanger. You cannot take possession of this 600,000. It's got to go to the middle person, and then the middle person buys your next investment property. And what you do is you defer your gain. So even though the new property you bought or investment was worth 600,000, your basis is only the basis of the property you gave up. So the new property is $50,000, and you get to depreciate that instead of the 600,000, but you avoided paying the 150,000
in taxes.
Yep.
Right?
Yep.
And the thing is, you can go into, like I know with Russ, he was showing us that you can invest in like a Family Dollar. So you become part of a conglomerate of people investing in a Family Dollar. Then a professional management team just sends you the money every month.
Yep.
And you avoided paying $150,000 in taxes. The really cool thing is, I mean, everybody says there's the only 2 things you can't avoid in life is death and taxes. The really cool thing is, upon your death, your heirs get a stepped-up basis, so that if that investment is worth $800,000 at that point in time, that would be their basis, and if they sell it, they pay no taxes. So it's like, hello,
Yeah. Well,
right? A win-win-win.
Right. What about this? So I just did this the other day with somebody, and I don't know why there we go. They had a rental property here. Their child is going to school out of state, and they're going to be there. They're going to medical school, so they're going to be there a while, and they want to help them out, and they were talking about selling. I said, why don't you exchange your property, do a 1031, buy a house down where your child's going to school, and then you rent out the other 2 or 3 bedrooms. So then you get money in for this house. You're not paying tax on the sale. You deferred it.
And let's face it, you know who the tenants are.
Right. And you just helped your child, which you wanted to do, but you're making money off of helping your child. And how often does that help? Come to play happen,
No.
you know?
Yep.
So, and these people aren't.
And that's all. And we talk about this all the time. Tax planning. Run something by somebody for a fresh perspective.
Exactly. Before you do anything, call us.
Right.
Yep.
Okay. And then we got another text here.
Yep. The other text is my friend's mom filed an extension and paid more than the estimated balance due with the extension. She forgot to sign the returns that she mailed in a week ago. She doesn't use a computer. Should we send in a new signed federal and state return?
What do you guys think?
Well, yeah, they're going to come back saying they're
yes.
not signed, so they could
Well,
come.
I mean,
I
but
think she should do
did
it
they
electronically.
Did they send an extension or did they send in the return?
No, she did an extension, and then when she did her real return, she forgot to sign it.
I think she should do it
So they're going to
electronically.
send it back.
I think they should come in and we'll do it electronically.
Yeah, get it in.
That's true too. That's true too. Because we get it in before extension deadline. Being a paper return will take forever. They're going to send it back because it's not signed.
I mean, the truth is,
would be
if
the
the
great-
return is done, we don't charge much to just do it electronically.
Right. Assuming it's right. So yeah, we would think you should file electronically. It'll be immediate. They're going to get it right away. When they open up the paper return, they're going to take the money and deposit it, but they're going to send it back anyway because there's no signature. This way you'll have it all done and you'll be within the dates of the deadline.
But otherwise, if you want, because I know people don't like change, if you want to continue to do it paper, I'm doing an offer right now. And the offer was rejected because when they filed their 21 return, they did it paper and they mailed it in without a signature and it was rejected. So it will be rejected, as Chris said. And so if you are going to do what you always do, I would send in another one signed. Would you agree?
Yeah, you could do that. I mean, but yeah, just be prepared. And I mean, if you have it all postmarked and you send it certified, you have the receipt that it was mailed on time, you'll be good.
And here's the thing. It is frustrating dealing with computers because, especially if you were born in an age where you did pen and pencil. But I'm going to tell you something. You really have to do everything electronically. It's moving in that direction. I mean, they're talking about eliminating the paper dollar.
Yeah.
It's getting to the place where when you are taking currency as opposed to credit or digital currency, the banks will call and say, why did you take cash? Cash is not king anymore. And I know a lot of people think that that's the truth, but it's digital. Everything has to be digital. And I will tell you, once you start filing electronically, I think you're going to find that it's wonderful, number one. And number two, don't think because you filed electronically that it protects your identity, because it doesn't. One of the great things about filing electronically is if there was any kind of breach at all, we know right away. As soon as the return was sent in, it'll say, this return is rejected because it was already submitted.
That's a good point.
So then right away you can start dealing with what happened,
That's a really good point.
right?
Yeah, because
So
you
anyway.
get forewarned.
So October the 15th, 11 days from now, is coming down the pike. If you need help, if you filed an extension, and what did we do, like 2,000 extensions the last day of tax season?
A lot.
At our
yeah.
office.
Yeah, and in our office, right. We will help. Don't let the 15th go by. These dates are not arbitrary. Penalties accrue right after those dates. You want to make sure you get everything sent in. Even if you can't file, we can help you to do a payment program. There are payment programs, short-term and long-term. And the other thing is penalty abatements. If you have an inability to pay and it's beyond your control, like such as a casualty loss, medical situation, theft, you can ask to have the penalty abated. And if they haven't done it before, you have a really good chance of getting that penalty abated.
Yeah, there's a client that I sent to Chris and Gracie, and I asked them to fill out the form for this client to abate the penalty. They're making it more difficult at the IRS though to abate those penalties. It's a little bit more difficult.
But did you see the PTIN? The cost of getting a PTIN went down?
No.
It went, what was it, $75 a year?
Right, and it was 20 last year.
Well, it's like $18.75 now.
Yeah. Yeah.
It's, it's just really surprised. Just was wondering why, if you knew why. Anyway, I'm Esther Golias, the tax lady. Our tax school is starting this week. We have a Saturday class, too. That's really cool. And you can also take our class online. You can go to egtax.com, and you can register online.
Yep.
And I think you'll find it absolutely fascinating. It's hard work, though. I'm not going to lie to you. It is hard work, but it isn't so much that you have to know computers, because we are going to spoon feed you the computers, and the computer's going to do all the work. But the reading is not. It's not like reading a novel. It's tax law. So. I just think it's fast. I love reading tax law.
Yeah, and we don't ask you to write any term papers in APA format or anything like that.
Yeah, no, I mean,
it's an easy school.
All adults, which
yes.
I think is kind of cool. It's all adults, many retirees, so it keeps you out of the ice and cold during January, February, March, and April if you should decide that you'd like to come work for us. And we not only need tax accountants that would be entry level, and they have a 4-year program that we engage them, and there's no charge to go, no charge for the teaching. But we also need people that would help us as support staff, right?
Yep.
Yes.
People that would, we'd say, can you get a hold of John, and we need his W-2, and that kind of thing. So if you're looking for something to keep you busy during January and February, besides us going to the Super Bowl, give EG Tax a call.
Good one.
All right. Until next week, I'm Esther Golias, the tax lady, with Tiffany Fabian, Christopher Fabian. Go to egtax.com, file those returns. We'll talk to you later. Thanks for listening.